What's going on, guys? Today we're going to be talking about SoFi Technologies as the stock made over a 12% move up in a single trading day. And this massive move up was brought on by comments made by the Federal Reserve Chair Jerome Powell. Not only will we be going over those comments, but we will also touch on inflation and where it could be headed over the next few months. And I also want to go over a couple different catalysts that could affect interest rates and what the Fed ends up doing over the next 6 to 12 months. But most importantly, we will be discussing SoFi and how all of this affects their business model moving forward. So if you enjoyed the video, drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. Let's start by taking a look at SoFi's chart. We can see here today that the stock moved up almost 12.5% in a single trading day. And over the last month, the stock is up over 19.5%. And year to date, we can see that SoFi is up almost 100%. However, it is down from its 52-week high of around $11.45. And this large move up in SoFi's stock price came on the back of some very interesting comments today from Jerome Powell. One of those comments was around the fact that the Fed does not necessarily need to see the US economy dip into a recession for them to start cutting interest rates. And this is a very interesting comment by Jerome Powell because it's different than a lot of perspectives that we have seen out there. A lot of investors have been expecting the Fed to wait until we start seeing signs of a recession before they would start dropping interest rates. And what Jerome Powell is saying here is that if the economy is in good shape and we see inflation coming down, they are open to cutting rates down, and this will overall help boost up the economy even more. And he made these comments while also acknowledging that the labor market has been very strong, and this is something that the Fed needs to pay very close attention to, because when the labor market starts to falter, that's when fears of recessions really start to grow, because people are losing their jobs and thus there's less money being spent out in the economy. The most exciting news from the Fed meeting actually came around their dot plot for interest rates. And at first this chart can be a little bit intimidating, however we can break it down and it becomes a lot more clear. Each of these dots represents a vote by a member of the Federal Reserve, and they voted on where they think interest rates are going to be over the next 3 years in 2024, 2025, and 2026. And we can see how those votes have actually changed over time. So in blue we can see their votes in September of 2023 and how those votes have changed by December of 2023. And there are a couple of interesting things to note from these dots. The first being the difference in the blue and purple dots. The purple dots are all lower and tend to be going lower over the long term. And what that really shows us is that the Fed is a lot more open to cutting interest rates over the next couple of years and trying to get down to a long-term interest rate of around 2.5%. And the second interesting thing about these dots is we can get an idea of where the Fed is expecting interest rates to be over the next year, 2 years, and 3 years. And we can see that by the end of 2024, the Fed is expecting interest rates to be around 4.75%. And we can see that by 2025, the Fed expects interest rates to be down around 3.5%, and by 2026, down again to around 2.75%. And a lot of these drops are going to be contingent on what we see from inflation. Over the last 4 months, we have seen very solid downward moves, sitting at around 3.1% currently. However, one thing to keep in mind is the year-over-year change that we're going to be comparing against, because by March of next year, we're going to be comparing ourselves against an inflation number of around 5%. And when we compare that 5% number to the most recent month of 7.1%, that is over a 2% difference. And what this ultimately leads to is it being a lot more difficult for the Fed to continue driving interest rates lower. And that's not to say that it is impossible for the Fed to drop inflation down to their 2% target. I just think it is going to be very difficult for them to get down there without a little bit of additional help. And part of that help could come from companies starting to slash some of their prices. Personally, I don't think Apple is one of those companies, but if we start seeing food manufacturers, maybe like a Procter & Gamble, start lowering some of their prices, that is going to impact their earnings. And we will start to see that potentially in their fourth quarter earnings, which are going to be starting somewhere around February of next year. And if we start to see weakness in some of these big companies' earnings, that could really start leading the Fed to question whether they need to start lowering interest rates sooner. And the question is, how does this really affect SoFi's business? And it has a major effect on their business, especially when we see the lowering of interest rates. This is going to be huge for SoFi because of the types of products that they offer. They are offering personal loans, mortgages, and student loans that are all very reliant on interest rates. And the reason reason the lowering of interest rates has such a huge effect on SoFi's business has to do with the fact that over the last 2 years, we have seen interest rates that have been relatively high. And what that ultimately means is anyone getting a student loan, personal loan, or mortgage over that time period has locked in a fairly high rate. And as we start seeing those rates begin to drop, we will start seeing a lot of those people refinancing those loans potentially to a company like SoFi. And even with the higher interest rates that we have seen over the last couple of years, SoFi has done a very good job of growing their member count, up about 45% year over year in their last earnings announcement. And this is going to be massive for them and their refinances as well, because as you get people into your ecosystem and using your products, it's a lot more likely that those people will refinance using your products as well. And overall, these should have a very positive effect on the bottom line for SoFi. We know that they are expecting to hit profitability in the fourth quarter. Analysts aren't really expecting the same thing. They're expecting break even on average. They have a low estimate of -2 cents and a high estimate of +2 cents. But what could be very interesting for SoFi's business is their 2024 numbers, because right now a lot of people haven't expected the Fed to cut interest rates in 2024. So some of these numbers could be relatively low to where we could see SoFi actually come out if we see the Fed dropping interest rates early in 2024. Right now, analysts have an average EPS estimate of 6 cents, a low of -5 cents, and a high of +16 cents. So overall, I think the meeting today from the Fed was very, very positive, not only for the US economy, but also for SoFi and their business model. This could be a very good thing to help SoFi propel their business towards profitability, and hopefully maybe in the back half of 2024 or potentially in 2025, them start looking at inclusion into the S&P 500. That could be a very big catalyst for the stock and help boost the price in a major way. But keep in mind, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So with all that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.